Everyone, my name is Dividend Enjoyer, and today we're going to be doing an Exxon Mobil stock analysis, ticker symbol XOM. Some basic information about Exxon Mobil. P ratio of 13.19. This is most definitely on the lower end. The company pays a 99-cent dividend quarterly to shareholders. One interesting thing I found is that Exxon Mobil has 42 consecutive years of dividend increases. So if you're looking for a dividend aristocrat, this is on the dividend aristocrat list. Exxon Mobil is up 3.43% year to date and down over 13% this month. Exxon Mobil has a market cap of $465.31 billion. So this is a very large cap stock, the biggest oil company. The dividend yield for Exxon Mobil is currently at 3.74%. As you can see, the stock price is $105.87. Here's some of their assets, Exxon Mobil's assets. Petroleum exploration and production. In the United States, Exxon Mobil's petroleum exploration and production activities are concentrated in the Permian Basin, Bakken Formation, Woodford Shale, Caney Shale, and the Gulf of Mexico. Unconventional oil and gas reserves. Exxon Mobil has over 9.5 million acres of unconventional oil and gas reserves, with a total resource base of around 18.5 billion oil equivalent barrels. Petroleum products. Exxon Mobil is the world's largest refiner and marketer of petroleum products. Some important things to consider. Exxon Mobil is extremely affected by the price of oil. Their earnings are completely dependent on it. Net income for 2023 was over $36 billion. This was a 35.4% drop from the prior year. The 10-year dividend compound annual growth rate for Exxon Mobil is 3.58%. 5-year dividend compound annual growth rate is a lower 2.28%. The gross profit margin is 31.53%. This is lower than the sector median of 46.23%. Here we have some analyst ratings for Exxon Mobil, and they're split. They essentially have more of an overweight and buy than a hold, but there's still a statistically very significant amount of analysts that have Exxon Mobil as a hold. But the price targets are a little better for Exxon Mobil, with the average at $129.75 versus, again, the current price of $105.87. The median price target, $130. The low price target, $105. And the high price target, $147. Of course, these price targets just are what analysts believe the stock should be valued at in 1 year's time based off of their valuation metrics. Now we have the risks of investing in ticker symbol XOM. The government could regulate against the company. I don't think this is as likely with the current administration. I think the Trump administration is going to be way more friendly to oil companies. I don't think that's a controversial statement. Exxon Mobil has the highest valuation of any oil company in the United States. This gives it a further amount it can fall, so that is a risk for them. Exploration and development program. Our ability to maintain, this is from their 10K, by the way. So this is about their exploration and development program. Our ability to maintain and grow our oil and gas production depends on the success of our exploration and development efforts. Among other efforts, we must continuously improve our ability to identify the most promising resource prospects and apply our project management expertise to bring discovered resources online as scheduled and within budget. This is just them saying that they need to find more places with natural resources, and that could be a risk in the future if they aren't able to. Safety, business controls, and environmental risk management. This is from their 10K as well. Our results depend on management's ability to minimize the inherent risks of oil, gas, and petrochemical operations to effectively control our business activities, including trading, and to minimize the potential for human error. We apply rigorous management systems and continuous focus on workplace safety and avoiding spills or other adverse environmental events. For example, we work to minimize spills through a combined program of effective operations, integrity management, ongoing upgrades, key equipment replacements, and comprehensive inspection and surveillance. Similarly, we are implementing cost-effective new technologies and adopting new operating practices to reduce emissions not only in response to government requirements, but also to address community priorities. So they're kind of getting ahead of that one. We employ a robust and actively evolving enterprise risk management system to identify and manage risk across our businesses. We also maintain a disciplined framework of internal controls and apply a controls management system for monitoring compliance with this framework. Substantial liabilities and other adverse impacts could result if we do not timely identify and mitigate applicable risks or if our management systems and controls do not function as intended. So, if their systems don't work as intended, it could cause worst case, like a BP oil spill in the Gulf of Mexico, if you remember that, or just minor errors. But safety is a big priority for Exxon Mobil. Competition is another big risk identified in their 10K. I'm going to read this to you. Competition. As noted in item 1 above, the energy and petrochemical industries are highly competitive. We face competition not only from other private firms, but also from state-owned companies that are increasingly competing for opportunities outside of their home countries, and as partners with other private firms. In some cases, these state-owned companies may pursue opportunities in furtherance of strategic objectives of their government owners, with less focus on financial returns than companies owned by private shareholders, such as Exxon Mobil. Technology and expertise provided by industry service companies may also enhance the competitiveness of firms that may not have the internal resource and capabilities of Exxon Mobil or reduce the need for resource-owning countries to partner with private sector oil and gas companies in order to monetize national resources. As described in more detail above, our hydrocarbon-based energy products are also subject to growing and, in many cases, government-supported competition from alternate energy sources. So what Exxon Mobil is essentially saying here is one kind of disadvantage they're at is they're not able to curb their production like OPEC. The United States does not allow them to. They also don't have the resources of a country like Saudi Arabia or different oil producers in the Middle East or Russia. And so they're having to compete basically against these entire other countries' production of oil, and it's very difficult for them. Cybersecurity. This was a really interesting one that I'm glad I added. Exxon Mobil is regularly subject to attempted cybersecurity disruptions from a variety of sources, including state-sponsored actors. See item 1C in this report for information on Exxon Mobil's program for managing cybersecurity risks. The measures we are taking to protect against cybersecurity disruptions prove to be insufficient, or if our proprietary data is otherwise not protected, Exxon Mobil, as well as our customers, employees, or third parties, could be adversely affected. We have limited ability to influence third parties, including our partners, suppliers, and service providers, including providers of cloud hosting services for our data or applications, to implement strong cybersecurity controls, and are exposed to potential harm from cybersecurity events that may affect their operations. Cybersecurity disruptions could cause physical harm to people or the environment, damage or destroy assets, compromise business systems, result in proprietary information being altered, lost, or stolen, result in employee, customer, or third-party information being compromised, or otherwise disrupt our business operations. We could incur significant costs to remedy the effects of a major cybersecurity disruption, in addition to costs in connection with resulting regulatory actions, litigation, or reputational harm. Here are some of the pros of Exxon Mobil that I cooked up. They have a high dividend yield and a growing dividend. You have all the advantages of being the largest producer of oil within the United States. The recent drop in the price has made the stock more attractive. Oil will likely continue to be a valuable commodity for the foreseeable future, and investors will benefit from raised costs. So if oil costs come up, you're going to make more money on Exxon. It's also a dividend aristocrat. Like I said before, the company is a member of the S&P 500 Dividend Aristocrats, reflecting decades of dividend increases. Low production costs. Exxon Mobil's efficient operations and scale often allow it to produce oil at a lower cost compared to competitors. I will now transition to the dividend discount model part of the video. Hello everyone, this is the dividend discount model portion of the video. I compute this by taking the median of these growths, adding 1 to it, and then multiplying it by last year's dividend, so then we can get an average for the next year's dividend. For the constant cost of equity capital, I use CAPM, and I think that this average market return is going to lower. I also think the risk-free rate is going to lower. So as you can see with what I Googled, this is the current valuation. And this is with the highest growth that I could find, between 2 to 3%. I'm more bullish, and I also think rates are going to come down more than this, but are bearish on the market as a whole. I mean, I'm bullish on Exxon, but even if the market's only expected to grow at 7%, it's only undervalued by $2. I think that you can exercise caution with this stock. We can change some of the other factors too. One reason I'm kind of very interested in this stock is I think eventually the rates will go down. It might take a year or two, but I'm willing to wait that long and have a long-term horizon. If we just lower this by 1%, then the stock's valued higher. But if growth is worse, the stock's way overvalued. If we're in between those two, it's close, and that's with a generous CAPM. So I don't think, in my unprofessional opinion, and again, this is not financial advice, I don't think it's time to add more Exxon Mobil if you're just in it for the dividend. But I do think it kind of brings an attractive offering in that if the cash flows are a lot higher because of increased oil prices and you think there's going to be continued instability in the Middle East, I think this could be a buy. And I think it's hard to say because of the nature of the business, but I think that historically this is probably the best stock to be buying within this industry. If you guys liked the video, please subscribe, leave a like, leave a comment. It really helps the channel. It really helps me. I put a lot of effort into this one, and I hope you guys enjoyed. Thanks for watching.